Apple just reported and they beat on both revenue and EPS. They were expected to do $1.15 in earnings per share and $182.89 billion in revenue. This is their press release. They did $83 billion in revenue, beating by $100 million, and they did a 2% increase, and they did per share of $1.20 versus $1.15. So they beat. Guys, what does this mean? Does this mean you go crazy and love Apple like Mo does? No, you don't. What it means is you evaluate the company. We're going to use this as an indication for the future, and are they still on the path that you've made assumptions on? That's the key here. After hours right now, let's go check our software here. And if you have our software, obviously follow along to it. If you don't have our software, you're crazy. Go to our everythingmoney.com and check. Oh my God, they're up 3.5% after hours. So Warren Buffett is not buying any more shares right now. It's too expensive for him. That's the key. That's what I want you guys to remember. You have to look at the stock and the company as totally different things. If you love the company, it doesn't mean you're going to love the stock. Warren Buffett loves Apple. He's not buying the stock. But when it drops, he buys it. When it goes to like 140, 130, he buys it. Let's look at Apple's year. They have a high of 183 and a low of 130. Guys, that's almost a 30% difference in pricing there. So keep that in mind when I say price have to fall a little bit, potentially. Now, let's go look at the 8 pillars for Apple. Okay, this is what we love seeing, guys. 5-year PE and 5-year price of free cash flow are both X's. It indicates that it could just be expensive. Everything else is a check. Buying back shares, low debt, free cash flow growth, net income growth, revenue growth, and a very, very, very high return on invested capital. They do an excellent job investing the money, getting a return on the money that's invested in the business through debt and equity. That is awesome. That's incredible. We love Apple. I have an Apple iPhone. It's ingrained in our lives, and they're probably going to be one of the biggest blue chip stocks for a very, very long time. But just remember, a high multiple of earnings and free cash flow is justified by moat and growth potential. I think they have the moat, but do they have the growth potential? So just to see how they've done the growth potential in the last 10 years, let's look at Stock Analyzer tool. 10 years, they've only done 10% revenue growth. That's not huge. I mean, is it good? Absolutely. But let's go look at their income statement. A big chunk of that growth came because of COVID. Is it still good? Absolutely. But if this company grows 10% a year for the next 10 years, $386 billion for the next 10 years, that would be a total of $1 trillion on the nose. Is it possible? Sure. Is it probable? That's what you need to ask yourself. If you're new to watching this, I'm Paul. I'm a value investor. My goal is to make moderate and conservative assumptions on companies and then buy them at a discount to what I determine to be intrinsic value based on those assumptions. If I can do that, my goal, what should happen is over long periods of time, stocks are a weighing machine. I'll get the value out of them. I'm going to take advantage of short-term gyrations in the market and people's perception. Right now, the people's perception of Apple is very, very high. And the numbers don't justify it in my case, potentially. But that is what my goal is to do right now. I'm going to use the Stock Analyzer tool that we have in our software to make assumptions about the future because every investment is the present value of all future cash flow. Usually I'd sit there and say, guys, from a qualitative perspective, make sure you like Apple. But we all know Apple. We love Apple. They have low debt. You know the company, things like that. You probably have less research to do on this company than other companies that are smaller you're not as aware about. So here, it's more important that you buy based on the right numbers. And it's just math. Every investment's the present value of all future cash flow. If I give you $1 a year for the next 100 years, that's worth something to you. Is it worth $100? No. You have to wait 100 years to get your money back. Is it worth $10? Maybe. Depends what your rate of return desire is. And that's what this tool does. So let's start making assumptions. Now, let's see what their revenue is. Let's look at their revenue growth over the last year. Let's see if we can find that here. View PDF and the consolidated financial statements. All right. So, sales. Consolidated, condensed by statements. Oh, got it. We got to do total now. Total sales right here. 81.4 last year, 82.95 this year. Okay. Is that a lot of growth? That's $1.5 billion growth on $80 billion. That's 2% growth. We said it before. I just remember that. 2% growth, guys. Now, this number right here to the right is the 9 months ended. 282 to 304. That's $18 billion. Sorry, that's $22 billion on $282 billion. That's not even 10%, right? That's 7, 8%, 9%. That's the issue we have, guys. It's not a fast-growing company. You have to remember that when applying the PE. So let's go make our assumptions here. I'm going to do conservatively 2, 4, and 6% revenue growth. I think 6% probably is a likely number over the next 10. Well, actually, you know what? Let's do 3, 6, 3, 5, and 7% revenue growth. Okay? It's still a discount the last 10 years. And as the world becomes more and more economically independent and wealthy, more and more Apple products will be bought. Now, profit margin. It has increased. So I'm going to do 22, 23, and 24. Because even though the last year was very profitable, probably driven by demand. Same with the free cash flow number. 24, 25, and 26. Now for the PE. The company's currently at 25 and 24 PE. Guys, the bigger and bigger the company is, the lower, the harder it is to grow, and therefore the lower the PE should be. The market overall is about a 15 PE. So I'm going to do 14, 16, and 18 for both PE and price of free cash flow. And for my desired annual return, I'm going to do 12.5%. It's such a large business, it's well known. I can't expect 15, 20% returns, but I still want a reason to buy the company. If I could just buy an ETF and get 9 or 10%, for buying an individual company, give me 12.5. So I'm going to hit the analyze button here. The stock is currently at 162 after hours. What's going to pop up here is 6 numbers. Low, middle, and high based on earnings multiple, low, middle, and high based on free cash flow. If all are green, that does not mean you go out and buy. It means go verify this data is correct. How do you verify it? Do research or join the Everything Money community, everythingmoney.com, where there are thousands of people in here who are talking every day about investments, and I'm sure a ton of them talk about Apple. Bounce ideas off of them. What have you seen? What have you not seen? If all these numbers are red, does that mean avoid it? No. See how close they are to the 162 number. Add it to your watch list on our software. If you add it to the watch list, it will email you, it'll notify you in the app, and it'll send you a message on your computer telling you the company hit its price target. So I hit the analyze button. All right. Somebody sent me a message. Sorry, I have to answer you later. A low price of 60 to 70, a high price of 105 to 120, 115, and a middle price of 80 to 90. All right. So guys, I'm going to put my watch list at 105, 104.90. And the reason being is this might seem like a low number, but just remember, guys, look how low it got. It got as low as 130, from 182 to 130. That's not far off from the 105 to 115 number. You might sit there and say, oh, it's still more. How many people would have thought at 183 they would go to 130? People were telling me they were never going to see 10% drops in these companies. These things do happen. Go look at all the major companies from every single market top and market bubble in history. The biggest ones fall the most. If you like this video, please subscribe to the channel. We have over 1,600 videos that are great. And watch this next video to understand our 8-pillar process even more. I appreciate your time. Thank you very much.